Hello everyone. In this video I'll be going through some of the problems that you'll have in Connect. Usually I will adjust or alter some of the data, but because of the complexity of some of these problems, I'll be using the data so you can just check your answers and your method, most importantly. Well, problem 8.1 is largely a review of work that's previously been done under the periodic and perpetual inventory systems. Just want to draw your attention to a few things just to remind you about these. One is that the discount for early payment does not apply to freight charges. Freight charges are separate. Also, when you're making your journal entries, when you are debiting directly into the inventory account, you know that you're using the perpetual inventory system on a payable. So when you purchase inventory, you'll credit payables, debit inventory. That would be perpetual. Under the periodic system, you may recall that we use an adjunct account called purchases for the inventory itself and freight in for the cost of freight. Also, when we see the fact that we are recording at below the purchase amount, if the purchase amount is $22,000 and we're recording it at $21,650, we're recording it net of the discount. So this is the net method of recording the purchases. And under this assumption, we believe that we'll take the cash purchase, so we will record the payable and the inventory net of the discount. And again, the freight is a separate charge, exclusive of the discount. In situations under the net method where we thought we would take the discount, but then we did not, we debit this purchases discount lost account for the difference between the gross and the net payable. This purchases lost discount is an expense, an added expense, a new line item on the income statement. That makes this very conspicuous to managers. And then finally, under the periodic method, be sure to calculate the cost of goods sold. Close out your adjunct accounts, close out the beginning inventory account, enter the counted ending inventory, and then using the formula listed here, you can calculate your cost of goods sold. So that is a largely review, as I said. However, 8.4 does have a newer component to it. While purchasing under FIFO is not new, some of you will have done earlier in a previous class, there is this LIFO reserve account, and that you would not have seen before. And the LIFO reserve account is designed to reconcile the difference between recording purchases, for example, in sales under the FIFO method or average cost method with recording it under LIFO. Some companies, for example, may record their financial statements, their purchases, externally using last in, first out, like to the IRS or to shareholders or to the SEC, Securities and Exchange Commission, but internally they may use FIFO. Well, this LIFO reserve is designed to reconcile the difference between the cost of goods sold using FIFO and LIFO, for example. With inflation, which is what we assume, had we recorded our transaction under FIFO, we would have had a lower cost of goods sold than under LIFO. So if we're going to compare the difference between the two, in this example, we have a $23,000 difference between what the ending balance would have been under LIFO and what it would have been under FIFO. However, we started with a $15,000 balance in this LIFO reserve account. So if we're supposed to have a final balance of $23,000, which again is the difference between the two methods, and we started with 15, then we only need an $8,000 adjustment, the difference between $23,000 and $15,000. So we'll debit the additional cost of goods sold, and then we will credit this contra inventory account we call LIFO reserve. And finally, in part 4, we're just adding additional operating costs, and they want to know what the income before income taxes is. So in this case, we're going to start with the total sales, the retail number of 810,000, and then we're going to start taking out the costs. We're going to deduct, for example, the value of the freight per unit, times the number of units, as well as all of the costs that are captured in our FIFO, cost of goods sold. And then finally, once we have the FIFO captured, then we're going to also reduce it by this additional debit to cost of goods sold, which we just talked about. And then we'll also take out the 150. So you start with the retail number and then take out your cost of goods sold that you calculate under FIFO, the additional cost of goods sold under LIFO, and then finally the 150,000 additional operating expenses. And just to review this cost of goods sold number up here, how did we arrive at the cost of goods sold under FIFO for these 45,000 units that we sold? Well, under first in, first out, as you recall, we go back to the oldest costs that have not yet been recognized. So we need 45,000 units. We have 10,000 here, reaching back as far as we can. They were costed at $8 a unit at that time. So that'll be part of our 440,500. Then we have to go to the next oldest cost, and we need 35,000 units more. 45,000 minus the 10 we already captured. So in the case of the 80,000, there's no discount given, so we don't need to do anything there in this particular case. But under the subsequent purchase of $515,000 worth, the portion, the 35,000 units, a portion of that 515 we're currently costing is going to have the discount netted from it. So we have that 2% discount we're going to take out of these 35,000 units that we're capturing here. And notice that that discount, that cash discount, does not impact the freight. That cash discount only affects the 35,000 units that we are costing $10 a unit. So that $440,500 then consists of 80,000, that's 10,000 units times $8, plus an additional 35,000 units, and that 35,000 units is going to be costed at the $10 cost per unit amount. So we'll have 35,000 units is $10 a unit. And then we need to net out the cash discount because we paid early. And then finally we're going to add in our freight of the 35,000 units times 50 cents a unit for freight. And again, the cash discount does not apply to freight. So that is our total cost of goods sold under FIFO. And that's the value that is included down here when we calculated our total income before income taxes. And that is a review then of problems 8-1 and 8-4. The next video we'll move on to other problems that you have assigned.